Alright, hello guys, glad to have you on board again today. This is Wednesday and we're going to take a quick turn at the market, having a look at the flow sequencing, as we haven't been updating this for quite a while now. So regarding the S&P 500, still the same old complicated sequence which we're in. Remember that we have terminated it officially by the rule set that we have around May this year, which coincide, by the way, with the kind of cyclicity for a longer term investment. The so-called Armstrong cycle, if you're familiar with it, for those who are investing in a long-term duration. But nevertheless, remember that when we do kind of flow sequencing stuff, we don't really pay too much attention to these kinds of longer-term elements. Nevertheless, so terminated here on a technical basis and fundamental basis, and since then we have been extending to the upside quite significantly. Hence why I'm getting a little bit more concerned about the actual market state, specifically in the US, because we're now trading and hovering more than 15% above those levels. Second element is that, well, of course, if we were to retrace down to those very same elements, we would have to cause some kind of a 14% drawdown in the current S&P 500 prices. However, we need to be very careful with those assessments, just to say that this is a very likely possibility and that the market may be very illiquid in between those two areas. That doesn't mean market will go in a straight line down. That just means, once again, this is possible. This is the last state of the market which value has been stated on, which is 5,200 on the S&P, and we're currently hovering near 6,000. So like I said, things could go blow up if we go back to that support in some kind of an unconventional fashion. And I would like to reiterate that I think this is possible. Remember that in the general grand scheme of things, our sequencing has terminated flow number 3, which is the last one in the sequence. And even though we don't trade extension of the third flow, that doesn't necessarily mean that you can preemptively trade the first consecutive corrective flow. And remember that there will be the set of 2, and the trading the second one is definitely what you need to be doing. In the interim, trading the first one is highly dangerous and should be kind of reserved for very experienced traders. So quick note in here, once again, you shouldn't be trading that one. You shouldn't be even trying to. It's the most difficult one to face because you're actually looking at building a market top, which is reverse trading or contrarian trading and all sorts of things that definitely require a lot more experience than some of you guys have. Okay, so just to set things aside in here, I am very, very concerned about the long-term state of the market, not necessarily in the short term. What I would tend to say is the short term has overextended now for more than 6 months. We're trading 15% above the latest traded support, but for now on, we're still making all-time highs, which means if you are selling this market, anticipating the kind of first bearish flow, you're currently being pain traded, just like I am. So remember that no one knows the future and so on. Okay, so always have some stop losses to your strategies. Don't let yourself ride unlimitedly. So that's the S&P 500 state. Until we get the first flow, which you know all the elements are going to have to be validated. That means this moving average, which is rising like crazy, needs to stabilize or contract. You need to have, therefore, prices sustainably held below that moving average to have it stabilize or reverse. And you want to see the resistance context falling below that moving average. And once you have all those elements combined, you know the first flow is getting in. Remember, the first flow is going to make likely, but not guaranteed, a third range boundary, and then generally will retrace a higher where you will get to be triggering the second flow. And remember, this can last very long. Just like this third flow has overextended for a long time, I see so many people not necessarily understanding that the first bearish flow could actually last for much longer than you'll be solvent. So same thing in here. Remember that market corrections will likely occur at some point. That's what the sequencing tells us. It's not just about long-term overpriced markets. It's just, if we just combine fundamentals on the long term with those kinds of flow sequencing, I very well stand for what I said. I think a first bearish flow is going to come, and I think it's not going to be pretty looking at the current liquidity states of the market. That's just something I wanted to share. Now back to cryptocurrencies, where it's a slightly different kind of picture here. The structure is, let me zoom out to the higher time frame so we get it visible, is as well. Third flow has now been played with the actual big boy, Bitcoin, which has now significantly broken and well hold closes below, above it. So that means we're now in the third and final flow for Bitcoin. So if you're into that boat, you can now set your trades at break even. Normally we should have have paid the kind of 50K-ish area, and I've been patiently waiting since summer to get this confirmation that we're having right now. So that means you have a guaranteed win out of this. You can't lose any more money, so just put your stops at break even and let yourself ride that thing. Remember, that's how it goes. You just don't know how long the third flow will last, and just like the S&P 500 preview, by assessing the rules, you'll make a nice gain, but that doesn't guarantee you'll figure out the market top altogether. So Bitcoin is on the third and final flow. God knows how long it will last. So please, guys, let yourself ride that trend. Don't profit take too much and too soon. But once you get the third range boundaries, you're gonna have to take your profits entirely, not just, yeah, the S&P has done it, so Bitcoin will do it. That's not how flow sequencing works. Remember, what happens on one chart doesn't necessarily replicate to any other. You just need to follow the same set of rules, unbiased, altogether. Remember, when the third range boundary happen on the third flow, take the fucking 100% profit off the table. So that's really the way to go. It's a different picture, which makes a lot of people kind of confused, because the supposedly market correlation doesn't play out. As you would see, Ethereum is far from doing such a thing currently. It will require breaking above the 4,000 mark, and we're still more than $1,000 away from it. So somewhat $1,000 away from it. So that would be still another pump of 30% to happen on Ethereum before we get to actually test the resistance. And remember, we need to trade above it. So there is a significant market move that is required now for Ethereum to perform similarly to Bitcoin. And of course, it's been leaving people kind of considering whether or not that's a viable outcome. Though remember that, once again, pull those informations out. They're not part of the strategy. The strategy tells you, once and only once we break the previous high point, we can confirm the existence of a third flow. You just don't know how long it will last. You just know that whenever a third range boundary happens after the market top builds, you really want to take your profits off the table, just as Bitcoin. That just means we have similar kind of overall structuring, but different kind of maturity stage. And you need to abide by that rule, just assessing and applying the rules as they are. And now you got all the rest of the market, for example, Atom, which I have said I see reasons for a first flow to emerge out of this area. Reason is to confirm that for now on, we're still far from doing such a thing. The moving average is still bearish, even though we're finally trading above it. As you can see, prices may want to sustain their momentum above that moving average to flattenish and reverse, and we're going to require the support context to break above, to cross over this flat or rising moving average. And for now, we have none of these two. So we need to be very cautious. Once again, trade what you see. Don't necessarily hold on to what you would like to see. Every trade has a stop loss, and every trade is a trade. Some will work, some won't, but overall you'll be profitable if you follow the guidelines. So pretty damn simple to me to assess those kinds of things. If you were trading like Chainlink, normally you should be fine as well, but you're definitely far from making anything so far. Okay, remember that in here you would be trading a first flow, which will likely sequence itself on the daily chart, assuming you consider the range to be a quality range, which I think is viable for Chainlink, which has a long-lasting history. If that is the case, then you're trading on a different kind of time frame. You've been buying after the third range boundary, the rising moving average, and you would be sequencing a second flow, but in here as well, in a different time frame. So remember that, trade what you see, don't trade anything else. So right now, I think there's no such a thing as a global crypto market, which everyone needs to go up or down, and everyone needs to do it in the same time. There's really a mesh of complex different time frame, different time scales that are actually being at play, so let them ride and follow what you see. It's really the way to go. For example, if you've been trading Solana, that would have been bare maximum in here, 4-hour chart, because there's certainly not like quality visible history on Solana, so it's clearly best case scenario 4-hour chart, and you would have sequenced that one in a very clear and simple pattern that would be somewhere a first flow here, very overextended second flow, third flow currently attempting to confirm by breaking the previous high point. So Solana may still have some upside, but that would probably be the last one. So rather clearing the end rather than the beginning. So be very cautious with that. Some markets have overextended their rallies. They're pretty late to the party. That's the case for Bitcoin, Solanas, and the like. Ethereum still has to prove its viability, and some others haven't even started yet. Some, like Chainlink, play on much longer duration, and I definitely think they should be considered played on different scale. So that's really the way to go. I would like to state that one more time, okay? Trade what you see. Don't listen to the news flows or whatever stuff like that. It's very dangerous. And remember that some asset may be correlated with the S&P 500. That doesn't mean the others will do too. So be very cautious with that. Okay, I'm going to leave you guys with it. See you next week.